join us for this important conversation on the state of banking in our community. I want to first thank Aaliyah Forrest and Shanice Wallace from our business strategy team for helping to organize this conversation. Of course, I want to thank Donald Wright, our deputy chief, for joining. But most importantly, I want to thank Jennifer and Michael, who will be leading this conversation from Dain Torpy and Foley Hoag, who very quickly and very warmly joined us as partners for this conversation. For those of you who are here or who may not be able to join us today, just to let you know that this is the first of a series of conversations that the city wants to hold, just a space to be able to share information, to gather any concerns, challenges, or ideas that are coming from your side, to be able to think about and noodle on here at the city, to put some ideas together on how we can best support you. So with that, I will turn the floor over to Aaliyah, and we will get this conversation started. So again, thank you all for being here today.
Thanks, Chief. And thank you everyone for joining us today, or for those who are watching the recording. We're so excited to have Jennifer Audi, our corporate partner at Foley Hoag, and Mike McDermott, who's an attorney and director at Dain Torpy. I'll let them introduce themselves as well. And they are our two co-hosts today, here to help share their knowledge of the recent banking developments, and then some best practices and what's next for you, your business, and whatever industry you're part of. And Shanice is our presentation guru, so I'm going to have her go to the next slide. All right, so we're going to go over, I think, first the Silicon Valley Bank timeline as an example, and then talk about best practices and what's next, and then have a lot of time for questions from you, but also some from us, as we get frequent questions from small business owners, startup founders, folks in the affordable housing space, et cetera. So we have some questions on our end, and hope that you have some on yours as well. And feel free to use the chat function or the Q&A function as needed. All right, next slide. And Jennifer, I'll let you take it from here.
Great. Thanks again for having me. I'm Jen Audi. I'm a partner at Foley Hoag and a corporate and transactional attorney. I'd normally be talking to most people about how you get financing from banks, and I'd be talking about SVB as a great member of that community to go find investments. Obviously, a lot's changed in the past 3 weeks. So I was going to walk us through a timeline on what actually happened. And before I start, let me just say, I am an attorney. None of what we're talking about today is specific legal advice. This is general commentary, and for specific legal advice applicable to your situation, always consult an attorney directly. So what happened? And this is just to give an overview. We've heard a lot about what's unfolded in the news. So on Wednesday, what really kicked this whole thing off, Wednesday, March 8th, Silvergate Capital, which was really a bank focused on crypto, is forced to close. At the same time, which was really bad timing, SVB announced that it had to raise about $2 billion, and it had to sell a big portion of its bond portfolio at a loss. And so then Moody downgrades the bond rating. So that's not good. Thursday morning, the VC community across the US starts to panic. On social media, VCs are telling, high-profile VCs who have a large presence on social media are urging their portfolio companies to get their money out of the bank. The stock price of SVB plummets by about 60%, and we have an old school It's a Wonderful Lifestyle run on a bank where people were actually driving to branch offices trying to get their money out of SVB. The chaos continues Thursday night all through Friday morning with people trying to get money out. There's a lot of frantic calls to us as the lawyers asking if they can do it. 11:52 a.m., a timestamp I'll never forget, FDIC comes in, shuts down the bank. So it's done, it's closed. And this is pretty unusual. When they do these bank shutdowns, they're usually done on the weekend after business closes on Friday, but they took action to shut it down midday on Friday. This was pegged as the largest bank failure since 2008 and the second biggest ever. There were about $175 billion of deposits now sitting at SVB under FDIC control. Saturday was a lot of people wondering, planning, trying to figure out what to do without access to their accounts. Sunday was an odd mix of emotions. Sunday morning, there were regulators on the Sunday morning talk show saying there's going to be no bailout for these banks. Everyone has to figure something out. And then Sunday evening at about 6 o'clock, we get an announcement that actually the full amount of all the deposits are going to be completely insured. The bank will open on Monday and you can go get your money. And the assets of SVB were transferred to a bridge bank that would open for business as usual on Monday. So a very wild and chaotic 3 days, very stressful for small businesses and big businesses. This hit everyone from the little startup in a garage to large public companies. So there was a lot of disruption. And then again, just so to give people context, why Silicon Valley Bank, what was going on here that made this sort of the bank to fall. They had a lot of big deposits coming out of 2020, 21 and 22. And then VC investment started going down. And so there were a lot of smaller loans. Those things didn't work together. The balance was off. They had a big bond portfolio that were very low interest, but long term, they had to sell some off to cover deposits to meet with regulations. And this just created this snowball effect of, they were selling these bonds at a loss because they had to. And meanwhile, they couldn't get new funding in because all this funding that was going to these startups that I think, as everybody had been hearing, have a hard time fundraising right now, had dried up. And there were not as many loans going out. So it was a very strange position for them to be in. The VCs were telling everyone to pull their money out. Some people had loyalties, SVB been their bank for ages. They lent them money. So they didn't want to be the last ones holding the bag, but they also didn't want to pull out. So there was a lot of strange situations at play here, and it sort of made for the perfect storm that resulted in this unprecedented shutdown of SVB. And I'll just say, we're talking about SVB. I'm kind of using it for shorthand. There was also Signature Bank got caught up in this. There's been a bunch of other banks sort of under stress. You've probably seen in the news, there were emergency loans made out to banks to try to stabilize this industry. But it was really SVB that kind of kicked off this whole thing. So best practices I've been talking a lot. Michael, do you want to cover some of these? I can jump back in, whatever you prefer.
Yeah, I appreciate the history here, and I'm Mike McDermott. I am a litigation partner at the law firm Dain Torpy. Also here to offer some general commentary and hopefully answer some generalized questions. Provide some answers to some generalized questions. I think one of the things that you'll hear throughout today and the answers, and anytime you try to look something up, is this situation has some unique features. Every single business's or individual's plan is fact specific, business specific, industry specific. So there are bankers and lawyers and treasury specialists who are offering advice here, and it becomes specific on what you do, where you're located, and what you need access to funds for, or what your documents provide. A couple of things going back to that timeline that Jennifer went over, and what it looked like in the real world is that one of the things that happened was Moody's reduced the bond rating of the bank, and banks are rated. They are provided a certain score by 3 different agencies. Fitch's is one of them as well. And many people, many small businesses don't realize that contracts that you have may talk about the rating of the bank. You may have a lease agreement or some sort of loan agreement or some sort of funding agreement from a VC firm that talks about where you put your money, or where a letter of credit or where some sort of security or debt needs to come from. And so there are trigger points in these agreements that talk about what a bank is rated. And that is something that a lot of small businesses and startups gloss over when they're dealing with these documents. And this is an example of when this kind of all came up and came to head. So as a real estate litigator, a large question I'm getting from clients is, my landlord reached out to me and said, even though I don't have a letter of credit with SVB, I need to get a new letter of credit because the bank's rating has gone down that issued the letter of credit. So this is an example where a lot of businesses, a lot of individuals aren't necessarily thinking about their bank on a day-to-day basis and how this situation could come up even if you weren't an SVB client, and why some of these best practices and tips are important for you as you go around about your business and try to avoid this situation in the future. So that first one is evaluating the stability of regional banks. There are these bank rating agencies. There are call reports that are put out quarterly and annual reports that are put out about banks, where you can look on your own and see how many deposits, the percentage of deposits that a bank has that is insured versus uninsured, trying to find a bank that has more insured deposits than less, because that reduces the risk of a run on the bank, because if people have insured deposits, they know that they're safe and they won't go try to draw them down. And also provides that information about those assets. So Jennifer was talking about the type of bond or other assets that SVB had behind it that created this situation. And so you can see which banks have more conservative, stable assets backing the money versus those that have them in bonds or other areas that may create, again, this situation. And that's something that most businesses would not have thought of until today. But one other note here in the best practices is regional banks are still important. There has been what's called a flight to the big four recently, as people pull their money out of SVB or other regional banks, thinking that they are not stable and risky, and bringing them to a Bank of America or another large bank. Regional banks, especially in the city of Boston, are really important. That's who's lending to the condominium associations, to the affordable housing developers, to the community groups and the nonprofits that may not have the capital or meet all the criteria for a standard loan or credit arrangement with a larger bank. And so regional banks need to be invested in and supported. And there are ways, looking at the stability of the regional bank, the information that they put out quarterly, and taking some own steps with your accounts, that you can keep using regional banks in a safe way that allows that to be an opportunity for our communities.
Yeah, and I think, as people are thinking about this, right, what do they do with their cash? I think, as Mike said, it's sort of, the banks just sort of worked. And so nobody was really focusing on cash management. And I think now there's a lot more focus on where is my cash? What am I doing with it? We had some eye-opening conversations with clients who were keeping just a lot of money in a deposit account, just a plain deposit account. And so, now I think people are having the conversations of diversifying where they're keeping their money, setting up sweep accounts, all things like that. So important focus on cash management, which is great. I think there's some practical considerations before you move your money. If you have a loan facility of any kind, there's usually a restriction on what you can do with your cash and where it can be. That was probably the first question we were answering through all of that with most of our clients, was what are you allowed to do if you've got, some kind of covenant requirement that your money be somewhere. And then I think, we saw almost instantly fraud and scams popping up as soon as there's disruption and uncertainty. Almost instantly there were emails and phone calls about moving your money and, oh, we can help you. Just be very careful at all times. Anytime there's uncertainty or disruption, keeping an eye out for, any kind of fraudulent activity and people sort of preying on uncertainty.
And one thing that Jennifer just mentioned, those cash management services or treasury management services are something that small businesses, startups, even larger businesses may not always think about, but again, are another lesson from what's occurred here. because SVB had its FDIC takeover on a Friday in the middle of the month, a lot of businesses got caught up in it either because they had money in their accounts going to payroll or because they worked with third-party payroll services that used SVB for a short-term holding account while they received your wire and then paid out to your employees. And so part of treasury management services or cash management is looking at those periodic times throughout your month or your quarter or your year when you have very large expenses and the need for a significant amount of liquidity and cash on hand. And then after identifying those pinch points, and the reason why that's important is because those would be times that you would be above the 250,000 FDIC insured amount, advising you on how you can reduce your risk, reduce the amount of time that level of funds are in an account, use those type of bank sweep services where your bank account is working with other banks to keep the insured amount across 3, 4, or 5 different banks or account categories that could then roll through at the minute that those funds have to go out to that third party, or using local cooperatives or chartered banks here in Massachusetts that provide additional insurance services for an account that needs to be above the $250,000 limit. So this situation, again, even if you weren't working with SVB as your banker, was a reminder that the insured amount is $250,000, but for businesses, there are times throughout the month or the year where whether it's because of a large payment coming in from a client or a large expense going out like payroll or rent, your account naturally could be above that amount. So when would that occur, and how can you keep that time period as short as possible?
Yeah, and to pick up, something you touched on there, on payroll, right? This is what everyone was freaking out about because they had to make payroll. And as you said, the timing, mid-month, it's when people get paid. And the reason that was top of mind for everyone was because there's actual real liabilities for missing payroll, and there's really no exceptions. I think we've now heard from various states' attorney generals that they were not going to enforce actions because of missed payroll because of SVB, but we didn't know that at the time. And there's actually direct personal liability to directors and officers of companies if you do not pay your employees when you say you are going to pay them. And that is true all day, every day. So that's just a general, thing to keep in mind operating your business. And I think what's come out of this too is people really focusing on, okay, how do I have plans to always make payroll if this happens? And that was a very real concern for most of these businesses.
And that certainly is something that, my clients experience and businesses I work with or are employed by experience as well. And, a couple other of items on that came out is the flexibility on when you can time payroll is a very small window on when it regularly goes out, on what that payroll date is defined for the employee. Again, we did hear about this prosecutorial discretion that AGs may not prosecute a missed or late payment in this situation. But another thing that was learned in this is the messaging you make to your employees. You cannot ask an employee to waive their right to be paid on time. And so reaching out to them and saying, this is a rare circumstance and very challenging because of the bank we use, would you be okay? Or we will try to, could expose yourself to liability as well, just because of how strict, especially in Massachusetts, these payroll rules are. So again, the treasury management strategies help with that as well, making sure that when those payroll dates come in and you don't have much flexibility on when you can pay out, you have a plan in place, a diversification of sources of funds available to make that payroll date.
And just to give I want to make sure we have time for questions from the folks that are online and also from us. But before that, what resources do you both know about that are for local businesses or anyone really that were either affected by SVB or any other bank? I mean, I heard a little bit about the Boston Public Library from you, Jen. If you want to share more about the partnership there with Foley Hoag, I think that would be helpful too.
Yeah, sure. So there's so many resources in the city for sure. One that we work with is Boston Public Library. If you're a resident of Boston, you can go to the BPL. They have an entrepreneurship center with all kinds of resources. They have an entrepreneur in residence. They have accounting firms come. They have law firms. Our firm is one of them, where you can book pro bono, legal counseling to just help your small business either get started or answer questions, or they have people who will help you file for a patent or trademark or things like that. I always direct people to the local office of the U.S. Small Business Administration. That's another great resource. So you don't have to go it alone, for sure. And then all kinds of small business assistance program, I think, through the mayor's office, which I know is available as well.
Yeah, I can share a little bit more about that. The small business team in our cabinet has a whole technical assistance program for small businesses, especially if your small business is in an area that would be a qualified census tract area. So if you do need help with, any of the services, that you can get at the BPL or at the city, accounting, legal assistance, branding, marketing support, we have services for you there too. And then if you are a startup or a tech company, Shanice, who's also on the call, can help connect you with resources and all the folks that we talk to in those industries. And we're a great connector, and we engage with all types of businesses in all types of sectors. So we're always happy to get a call or an email from anyone who wants assistance. Plus, there's a bunch of business associations out there and organizations that serve businesses. And I listed a few on this slide: BECMA, Amplify Latinx, Startup Boston, Small Business Strong. These are all great organizations to just get linked into because they have webinars just like this one. They had one, Startup Boston had one this morning, and we work with them and collaborate frequently. And then Shanice, can you go to the next slide really quick? Thanks. So really the question from our end and from most folks that we talk to is what's next? And a good question to start off is, what does the future of early stage investment look like, especially for BIPOC and women-owned startup founders and business owners, especially with the absence of SVB, which was a huge player in the space. They had a big location in downtown Boston, and they held a lot of events in that space for startups. What does the future look like?
Yeah, I think, it took a hit for sure from everything that happened with SVB. I think it's going to be, we were already sort of in, a little bit of a winter of investment, right? The VC investments slowed down, especially in life sciences companies. Tech companies also slowed down. So these startup companies were already struggling. And then we had one of the biggest supporters, SVB, fall down, and they were a huge supporter of the innovation economy in Boston. It was their focus. They understood it, which is why people really liked it. They understood the risk, and they were willing to make that investment. I think, and now I'm sort of speculating based on what I've seen so far and what I think will happen and talking to people. I think it will continue. I think it will be diversified. There's a lot of other players who want to get into this space, who have been trying to get into this space. I think the SVB void will open up room for them to come in, which is good. I think people will start looking to other sources, maybe some non-bank lenders who are in the space. The flip side is they're usually more expensive, where they'll have to really go out and raise that another round of equity, which might be a down round. It might dilute your ownership a little bit. But I think, the interest and the support for the startup community in Boston is so strong. And I think if anything good came out of this, it was actually seeing small businesses and startups on the local news because they were so impacted. And you saw all of these, real people struggling because of this. And I think at first there was this impression that, oh, it's SVB, that's a bunch of venture capitalists out in California. Well, no, it's your neighbor who, is the operations manager at a new startup trying to develop a cancer drug, right? And how it impacted the local communities. And I think there's been so much conversation around that, which is great. I think the interest in what's going on and what's being developed in Boston is so strong. We have such a great, community here in life sciences and tech that I'm very optimistic. I think it's just a matter of getting that dry powder out of the hands of the investors into these businesses, and hopefully, there'll be other players who step up to fill that spot. By SVB, it'll definitely feel strange. I think it'll be take some getting used to, but that's okay. I think change is a good thing here, and I'm hoping for some good opportunities.
Thanks, Jen. And I don't know, Mike, if you wanted to share anything from your perspective too, not just for businesses and startups, but I know that you work a lot with landlords and tenants. Is there anything that should be in the what's next for them from this experience?
Well, I think Jennifer had a really good point, and that is this provides an opportunity for others to get in the game. And one of the things that Boston was particularly impacted with by the SVB crisis was affordable housing. And it wasn't because SVB itself had originally been in the affordable housing sector, but Boston Private, a Boston regional bank, had a very long history on focusing on the affordable housing sector in Massachusetts, working with developers using tax credits, working with nonprofits and municipalities on setting up affordable housing programs, working with the city of Boston and the Commonwealth on first-time home buyer mortgages that were available at easier access and lower thresholds so that those individuals could get into homes. When SVB purchased Boston Private, they purchased that whole department and all of those assets and obligations as well. And so SVB has had an impact on affordable housing project in Massachusetts. But other regional banks are now able to get in that game. The elephant in the room is no longer there. It creates the space for them to learn from what Boston Private did over 4 decades and create their own programs and set up their own brands. So there is an opportunity that working with regional banks and having support and incentives through local governments, we can move in that direction in the real estate and development space to have those new competitors and new opportunities here in Boston.
Thanks. And with that, let's open it up for questions. I know we have a few folks in the room. Want to give some time for you to ask questions. Can either be in the chat or in the Q&A. Up to you. Any questions? Any questions? And if you don't, I'm going to have Donald ask a question because I know he worked in the housing department.
Thank you, Leah. And I would have to say that Michael really touched on it, right? And these are some of the challenges that we found on a local scale. And my concern is, what does this look like in the future, going forward? What are the challenges going to be to underwriting some of these deals and the accessibility moving forward? Is there any thought or do you have any idea of what some of these, sort of new players in this space may be looking at, Michael?
Well, again, I think there was a little bit of a dampening on the ability for new players to get involved because so many people were looking at who was established and who was already doing this. And those, in a way, at the government level and at some of the developer levels were pre-approved or prioritized as the preference that if you worked with them, you would get through this process a little bit more easily or get your project approved and off the ground a little bit more easily. But I do think Boston Private's history here, and if you reach back into the 80s and the 90s as they were developing these programs, provide a blueprint that other banks, other lenders, other government agencies can look at. Certainly, there is a dire need for this type of financing, and not just on the construction side, but on the home buying side as well for financing the actual purchase of affordable units or market rate units that are at a lower, strata for cost and purchasing power. And the other thing just to remember is, as of right now, with the SVB Bridge Bank and with First Citizens, which assumed and purchased Silicon Valley Bank, the existing lines of credit and financing opportunities are still there. So if you had an affordable housing financing project or program, that is still available to you through the way the assumption occurred. It's now in North Carolina, a North Carolina bank doing it, but it is still there.
Thank you.
And actually, just a note about that assumption. I'm glad you mentioned that. We forgot to provide that important update, right? So yesterday, I think it was yesterday, we learned that First Citizens assumed basically the entire portfolio of SVB. A very important announcement that came out of that is the FDIC insurance is now back to $250. Right. So for a few weeks there, everyone was saying SVB is the safest place to hold your money because there was no limit on what's insured. That's gone. We're back down to $250. So if anyone listening has an account at SVB or now First Citizens, you're now back under that 250,000 threshold. And again, we don't know what things are going to look like under First Citizens yet. We'll see what happens.
We've gotten some questions like, if I were, I had money somewhere, is there any consideration I should make before moving my loan to another bank, or if I wanted to move all of my money to another bank? Like, how does that work, and what should I think about before I did that?
Yeah, I mean, I think so. Every situation is going to be different, for sure. I would say the first thing you have to do is check if you have a loan and you want to move it over. Check those existing documents. Usually there's a prepayment fee or some kind of penalty if you refinance too early. It might be worth it. It usually decreases over time, though not always. So just factor that into the cost of moving. Also compare terms. You may have a really good interest rate because you did your loan a couple of years ago. And if you've seen anything about interest rates, they're not so great right now. So, there's the uncertainty on one hand, but also considering the expense on the other. That said, now is a very interesting time to be shopping for debt because everybody's trying to, pick up some of this business. So I would say, what I tell everybody, even before this happened, get multiple term sheets, not just one term sheet. Compare them, talk to your lawyers, accountants, the Small Business Administration. They'll help you figure out what's the best term. And then just, think about the relationship with your bank. I think, as Mike mentioned, there was this move to get everybody, I think, a move where everybody started going to the bigger banks for security, but do they understand your business? Do they understand you? Are you going to get the level of attention that you may have gotten somewhere else if you're at a smaller bank? So those are all, it's a multi-factor decision, I think.
I think that's great. And from some of the experience we have observed and been involved with, again, that face-to-face or direct communication is really important. We've seen some regional banks who are willing to sit down with smaller businesses, startups, and see what their prior terms were at SVB, and maybe they couldn't match it, but at least have the conversation of how they could be most competitive. And so that goes to Jennifer's comments about really shopping around and trying to get the same rates and reduce the same fees. We also have seen some practical considerations. So some people may want to just turn off the light switch and move immediately. But do you have any outstanding checks that are written through that account? Do you have clients or customers who are wiring you money on wire instructions that they may not look at right away to see what's changed and just do what's automatically set up in their automated payment system? And as a result of that, you may need some lag time, leaving some money behind, leaving some accounts open under the FDIC insured amount, but not just having a knee-jerk reaction to say, I'm taking everything out today, I'm closing everything tomorrow, and I'm moving to a new bank. That wouldn't give you the time to shop around. That wouldn't give you the time to speak with your lawyer or banker about fees or penalties for closing too soon. And that could certainly create a situation where a check that you previously wrote or a wire that's coming in would have some sort of bounce back that would raise questions from a client, a vendor, someone else, where you may have needed to leave that lag time.
That's good advice. Thank you. I think we have 5 more minutes. So I don't want to keep asking.
I have a question.
Oh, good.
I guess for people who are startup founders, business owners, or just new to business, what should they consider? What questions should they ask about opening their bank account or finding a bank for them?
Yeah, I think, I would say, think about before you commit to a bank, what are your needs, right? If you're starting a business, are you a high, cash transaction business? Are you a cash business, right? We've had clients in, for example, had the food truck or something. It was before the, automatic payment on your iPhone, handling a lot of cash. And so they wanted to be able to work with a bank where they could get that cash somewhere safe. If you're a cannabis company, for example, there's a limit to which banks you can use. You've got to use a local bank. If you're sending a lot of wires back and forth, that might be something. And how much are those fees? So I would say the first thing I tell people is like, how are you going to use your bank? What do you actually need to do? And then kind of going in with a list of, this is what I'm going to need. And this is what I might need in the future. I might need a business loan, not right now, but if I did, what can you offer me? But instead of just, I think what we see is a lot of people, they've got a personal bank account at such and such bank, so they just go there for their business. That's fine, but it may not always be the best approach.
And I think SVB has gotten some attention because they were so focused on the tech or the startup sector. And so there's been commentary about a bank being too focused or too prioritized in one sector, which could be true. But when you're looking at banks, the industry they work with is important. Law firms have to work with banks that know how to operate what's called IOLTA accounts, a very specific type of trustee account where they're holding client funds. And there are other industries that have kind of banking specific or relationship specific questions that they should be asking the bank. So if it's a bank established in that industry, that would be something to think about how you would use the bank. We talked a little bit about how to look to see if this bank is a risky bank or has assets behind it, or would it be subject to a similar bank run? That is starting to really get into the weeds and not something that most people are going to think to do. We've learned these lessons. And so you can look at call reports, you can look at the kind of the Fitch rating or the Moody rating of the bank to just see, in the worst case scenario, if this bank got into trouble, would it be a place that is similar to what occurred in the SVB scenario? Or is it a bank that is capitalized enough and insured enough that people are going to be able to leave their assets there and have a stable experience through some sort of downturn or point of crisis in the market?
Awesome. Well, thank you both for being here. We did record this whole webinar, and we did have a lot of people fill out an initial survey that we put out when the SVB situation happened initially. And I was saying earlier, it feels like so long ago, but it really wasn't. So we will share this webinar with them, and anybody else who may have questions can reach out to me or Shanice. Our email addresses are here on the slide, and we're happy to connect them with you, either of you, or anyone else that we think might be helpful. So thank you again for sharing so much knowledge, and I'm sure we'll be in touch. As Shagun said, our chief, we will be doing more of these. And the banking ecosystem locally, nationally, it keeps changing, and there's new news all the time. So who knows what we'll be talking about next. But thank you both. And Donald, I don't know if you have any final thoughts, or Chief Idawu.
If the chief has anything to say. Just want to thank everyone for their time on this very, very sensitive subject matter. I think the information and content that we received today will at least put some folks a little bit more at ease. allow for us to identify and tap into some of those resources that have been shared with folks today. So again, we're here for you. If you need any of our services, by all means, reach out to Leah or Shanice. And the Office of Economic Opportunity and Inclusion is here for you. So do reach out. I want to thank you all. Leah?
Thank you so much, Chief, Deputy Chief, Jen and Mike, Shanice.
Thank you.
Thank you. Have a great afternoon.
You too.